G'day folks, Jim here from FX Charts. Hope you're keeping well and ready for another busy week of trading the currency markets. The dollar finished on a very firm note again. That's despite some soft US data on Friday that came out. The PPI and the Reuters Michigan Consumer Sentiment Survey were both weaker than expected. The US dollar took no notice at all and went to new trend highs against the European majors and made solid progress elsewhere. And this is as we approach the FOMC meeting on Wednesday, which the market's looking to the Fed for guidance and whether they'll actually remove the need to remain patient as far as the statement goes. And the whole week's trade really is going to revolve around that. I think if they remove the word patient from the statement, the US dollar is going to continue its uptrend. If it remains in there, we're going to see a very nasty squeeze of dollar long positions. But anyway, we'll go and have a look at the charts and see what they have to say about it. And we'll start off with the euro. Now, as you see, the euro, it actually got down to a low of 104.60 on Friday. Much of European trade was centered around 106, but it started to drift lower and basically had a pretty solid move lower. Broke through support at 105 and went down to new trend lows. Now this is an hourly chart. It looks to me, I mean, it's a bit difficult to tell. There is a possibility of some growing bearish divergence down here in the 1 and the 4 hour charts, as you can see. So if you're long dollars, I think in the medium term, longer term, it's definitely the way to be. I think we're going lower, or the euro's going lower. But in the short term, at least, there are some danger signs being flashed around, and so some caution is warranted. I think I wouldn't have all my eggs in one basket, and I wouldn't be overly long of dollars, but I think still hold a core short euro position, but allow yourself to add on to it into strength. The initial point of on the top side is about 105.5. This minor downtrend resistance. And then further out, we've got sort of, we can go right back up here to this first FIBO resistance. That's about 106.70. And then the next trend line, which comes in with the sort of 38.2% retracement of that move, is about 108 really. So we could see a very nasty squeeze of euro short positions if the Fed don't do anything on Wednesday. But time will tell. Beforehand, today we've got Mario Draghi speaking, actually, so keep an eye out for that. He's likely to be pretty dovish, I think, and possibly could talk the euro lower. The subject is not directly related to current market conditions, so he might not mention it at all. Let's go and look at it further out. This, I mean, it's really just one long fall from above 138 here all the way down. So there's not much we can glean from that, or really the weekly charts. Now, if we close that up a little bit, I think we are this channel that we appear to be in. That's going to come up here at around sort of 10. It's not really much till about 101.30, 101.40, with the FIBO support down here about just above parity. So there's that to look out for. The 2003 low, if I can find that down here somewhere, that's at 103.35. So that's going to provide some support there, just down around that low here. And as I said, we've got the base of the channel and the 76.4%. Now I think we're going down there, and I think we're going a lot lower. If we, if I pull this up a little bit, this, as I've said many times before, this head and shoulders target. We broke the neckline way back here, and we're heading down here, and I think this is basically this is at 0.78, somewhere around there. I haven't measured it exactly, but this head and shoulders, I think we're going there. That doesn't, as I say, knock out the chance of a nasty bounce in the meantime, but I think, as I said just now, maintain a core short euro position, but do allow yourself room to sell into rallies, because I think we could get a squeeze. We need a squeeze really to allow the market to build the legs for the next leg lower, which, as I say, eventually it may not come for a while. Although this move is it's been very sharp, so if it continues, it's going to come about a lot quicker than people expect. And if there's any sign of major problems in Europe, in Greece, then the move could happen much faster than we expect. But as I say, leave room to sell rallies, but in the meantime, maintain a core short euro position. Right, moving along to dollar yen. Right, now dollar yen got left out of the action a little bit on Friday. It had a sort of 40-50 point range, but it looks as though it might be building for something. It's held up by this minor rising support that comes in about to 121, 120. But overall it looks to be trading within this channel here. Now the top here, which we saw the other day at around 122.02, we could just continue to gyrate within this range, and I suspect that's going to be the way of it, to be honest. The yen crosses are all heading a fair bit lower, and euro yen's down about 8 or 9 big figures over the last couple of weeks, so that's placing a cap on the top of dollar yen. Now the 4-hour indicators aren't looking positive, so we could easily come back down here and test this support and possibly head a bit lower. We're going to have a look at the dailies. As you can see, this is the minor channel here, and the previous resistances, which will now be support. The indicators are not really showing any signs of wanting to push higher. We go out to the weeklies. The previous top way back here, up around 124.13, I think it was. We shouldn't count out the chance that the dollar could move up there, but I'm not sure it's going to happen this week or perhaps next. We have got the BOJ meeting this week, although there's not expected to be any change in policy there, but watch out for anything left field from the statement. But the weekly indicators are not showing that the dollar is looking likely to push on all that much higher to me, and I wouldn't be surprised to see a bit of a correction lower. The monthly charts, well, we've got plenty of resistance up above here. This is 124.13, and these red lines that I've drawn in are all previous highs that will act as resistance as we do go north. Eventually, I think we're going to, but I think the timing is too early yet. So there are better things to trade really than dollar yen at the moment. The yen crosses is where the action is. But if we break 121, we're going to come back down here to this 120.85 FIBO support. Then back down here towards this previous low here, and that's about 120.60, 120.50. This bigger larger degree of FIBO support. So I think there's better things to trade, but out of choice, I'd be looking for a bit of a dip down here, where I would be looking to buy dollars, because I think eventually we are heading higher, and we will eventually look to test this top and the top of the channel, but it could be a while away yet. Moving along to cable. Right, cable. Cable's had a big move lower at the end of last week after Mark Carney, the Bank of England Governor Mark Carney, spoke on Thursday, who suggested that he's in no hurry to raise rates. That saw a bit of a capitulation in sterling and some decent profit taking in euro sterling as well, which sent the cross sharply higher from 0.7015 base, 70.15 base, up to around 71.40. Sterling came under heavy pressure and is at trend lows. Hasn't been down here for several years now, really. The 4-hour charts are pointing lower, so we could easily see further losses. We'll move forward to the daily charts, and sterling's been trading beautifully within this channel that really started back, I suppose, what are we going back, July 2014, when the decline started. That's from above 170. So right now we're down here. The base of the channel is at around 146, 145.5. So I think we're probably headed there. The dailies are definitely allowing room to move lower. The weeklies equally, they're not showing a great deal of direction at this point in time, but they're certainly not heading higher. And it could well be that if we can take out the current lows, we're probably heading towards that 146, then the base of the channel, and then down here the first real FIBO support of the major move up is down at 140, 143.5, 143.70, somewhere down around there. So I like to stay short cable as before. We'll have a look at the monthlies, see what they have to say. Yeah, they're the monthly indicators are not looking positive at all. So I think that's the direction we're heading in. But once again, as with the euro, you've got to leave room to sell rallies, because if the Fed stay unchanged on Wednesday, we are going to see a nasty short squeeze of cable positions. Now, if we go back above here, there's not, as you can see, there's not really an awful lot of resistance until we get to this 148.5, and the first decent FIBO level is at 149. So I wouldn't be overly short down here, because the 1 hour charts are actually trying to point a little bit higher. So if we can take out this kind of high here, 147.5, we might see a bit of a squeeze back up on Monday. But at the end of the day, it's likely to be pretty choppy, I think, until Wednesday, and then we'll get the real directional move from the FOMC. Moving quickly forward to Swissy, I'm not going to spend a lot of time there, but Swissy's well back above parity now. Actually, we need to really go out and have a look at the 4 hour and daily charts. I'm not involved here at all. We need to get back above. Actually, it is interesting that although the euro made new lows on Friday, dollar Swiss did not follow through and make new highs. So I think that's a potential warning that the current trend may be running out of a bit of steam. I wouldn't be going overly short of dollars, but I think it's worth taking note that dollar Swiss was unable to make it to a new high. But if it does move along, then we're really heading back up to these highs here around 10. Where's that? 102, 30, 40, and I can't remember if that's a spike high or if that's real. But that's about just under 103. What's that? Early January. I'll have to look that up. But stay away from it. It was very illiquid. But it has been a steady grind high since the Swiss National Bank pulled their trick. But as I say, I'd stay away from it and trade the euro. If we do go below, back below parity, there's going to be minor support at 0.99. But the real trend resistance doesn't come in here till about 98.25, where you know that level should hold it. Now they're moving on to the Aussie. Right, now the Aussie traded beautifully up to the FIBO resistance and the 200-hour moving average on on Thursday actually, and then remained relatively big through much of Friday. But then as New York came in, the US dollar found some new legs, and it really drove all the other currencies lower. The Aussie finished the week below the 100-hour moving average, and that should act as first resistance here, not 76.5 on the beginning of the week today. If we do head higher, there's some resistance to around this sort of 76, 65 area, and then we're going to find some sellers all the way up to sort of this 77 areas, 77.10 and 77.30 are the FIBO resistances. The hourly indicators look a little bit neutral. Not really. I think the Aussie's going down, but whether it goes down early on Monday, I'm not really so sure. The 4 hour charts are trying to point a little bit lower, but there's decent support on the downside. 77.10 I think was 76.10 I should say was the low on Friday. That'll provide some support ahead of 76 the figure, and then last week's low down here 75.59 I think it was. Now that's going to provide good support, but I think we're heading down there eventually, and it's just a matter of time as to whether the Fed make a move this week or in the following month's meeting. We've been in this channel, and I think we're probably going to accelerate eventually to the downside, but it's been tricky. The Fed have previously said they want the Aussie at 75 cents. I think it's heading there, and I also think it's then heading a great deal lower. The base of the channel is down around here about 72.70. Before then, though, there's support at the October 2010 low at 74.14. I think we probably have to go out to the weeklies to look at that. So it's somewhere out here, 74.14. I can't. Is that it there? Yeah, I think that's it. No, that's not it. 74.14. That low there. There we are. So there's going to be a minor support there. And then 72 or 71, 72, the figure is going to be very strong support, which we need to go out to the monthlies to look at, because that ties in, although it's not easy to see, this level here, 72, the figure, that ties in with the 76.4% of this move up and the 61.8% of that move up. So as I've said many times before, I think we're heading there, and eventually we're heading to the head and shoulder target, which is a lot lower, down around here, which is down around 60 cents. So that's a way away yet, but the monthly charts are still pointing lower. On the top side, if we do see an RC short squeeze in the event of the Fed doing nothing, then this 100-month moving average, as you can see here, that'll come back into play. That's around 77.60, 77.70, somewhere around there. So that's been acting as a pivot for the last couple of weeks, really, and it may well continue to do so for a while before the Aussie finds it tough going on the top side, and particularly as we head towards the next RBA meeting, when another rate cut will be in the air, will be speculated about, and that could well push the Aussie lower. And if the RBA do cut, then I do think we're heading towards these lower levels. Finally, the Kiwi. Right, as with the Aussie, the Kiwi having bounced up here to this 74.47 level on Friday, 74.44 I think it was actually. It found it tough going on Friday. This is just a 4-hour chart, and it came back lower as the US dollar made up some ground on Friday, and the Kiwi finished back down near its lows. It was 73.35 it finished at, having traded down to the 73.10 level. Now, that 73 figure 10, I think is going to provide some early support on Monday. But I think eventually we are headed lower, and we're probably going back down here. This 72.60 area, where are we? This 72.80 and 72.60 are minor FIBO supports before we head back down here to this sort of level seen early last week, 71.80-90. If we do see a bit of a spike higher, the Kiwi did manage to finish above the 100-hour moving average. We could head back up here to this sort of 73.90, 74 area, but I think that will be a sell now. We got the 200-hour moving average and the short-term trend resistance there, but I think that would be a sell, because I think the US dollar is going to continue strong. And have a look at the 4-hour chart. So that's not telling us anything different, really. The trend low down here is at 71.75. Eventually, I think that's going to come under pressure, and the Kiwi is going to head lower. We can't tell a lot from the daily charts, but as far as the weeklies are concerned, the next major support on the weeklies will be down around this FIBO area, and that's down around sort of 70, 71 the figure. And if we break that, then I think we're going quite a fair bit lower. I think that's going to happen over time, but it's too early in the piece at this stage. The weeklies are not telling us a great deal, possibly even trying to recover a little bit as the Kiwi, or they're stabilising at least, I should say, as the Kiwi consolidates in this area. But the monthly charts, I don't have a huge amount of history on these monthly charts, I'm afraid, but the indicators are pointing lower, so I think eventually we're going to take out the downside support here and head a fair bit lower. That's about it on the Kiwi. What I'm going to do is I'll do a quick rundown on the dollar index, and we'll have a look at that. Okay, here's the dollar index, and as you can see from this chart, really since May last year, the dollar's really just been in a slow, well, not so slow really, in a defined uptrend, and it really looks as though it's going to continue. The dailies are pointing very much higher, although they're becoming somewhat overbought, which makes me a little bit concerned. But they're showing no signs of turning at this stage, and so I think we really have to remain with the trend. If we go out and have a look at the longer term charts on the monthlies, and as you can see, this is a monthly chart, so this is going way back, and we've taken out this high here. We finished above 100 over the week. We got as high as 143 before finishing at 100.18. And there's really not an awful lot until we go all the way back here to this 2003 FIBO level here, up at this 61.8% of the whole move down from above 121. So that we've got a couple of highs up around here, and that 102.50, 121.10 is that high. Sorry, I beg your pardon. 102.15 is that high, and 101.81 is that high there, with the FIBO resistance, strong FIBO resistance at 101.77. So this, as we approach this area here, it's going to be very strong resistance indeed, and I'd be tempted to take some profit on long dollar positions if we do see that, because in the short term things are becoming overstretched. Eventually, I think we're going a lot higher. As you can see here, or possibly see, 109.12 is the 76.4%. We've got a lot of work to do before we get there, and I think it would just be healthy. The last month has seen a very sharp move higher, so some kind of consolidation wouldn't hurt. Probably below 102, below these resistance level back here, and but then I think eventually we are hitting high. But it all depends though on what the FOMC do on Wednesday. So we've got to take our lead from there. As I say, today Mario Draghi is speaking, and we need to be a little bit careful there. There's plenty of other action coming out over the course of the week. We've got the German inflation numbers tomorrow, as well as the ZEW. Today we've got not an awful lot. There's the US numbers, the industrial production capacity utilization. And then, as I say, later on, Mario Draghi speaking. Then there's bits and pieces throughout the week, but really the highlight will be the FOMC meeting late on Wednesday. Other key points to watch this week will be the Swiss National Bank have got their interest rate decision on Thursday, and there's a bit of stuff out of Canada. There's an RBA speech by Governor Glenn Stevens on Friday, so that might move the Aussie around a bit. But aside from that, there's not an awful lot out this week, and it'll all be down to the Fed and what they decide to do. So have a very good week, and we'll talk to you next week.